The most powerful oil kingdom on earth is quietly making a move that could shake the entire global financial system. And the strangest part? They are not announcing it. They are not making speeches about it. They are doing it in silence, deal by deal, agreement by agreement, handshake by handshake. And while the world is watching the oil prices, while the world is focused on wars and elections, Saudi Arabia is slowly, carefully, and very deliberately repositioning itself on the global chessboard. Not away from the West completely, but towards something that could eventually make the West irrelevant in certain corners of the world economy. What is that something? It is called BRICS, and what Saudi Arabia is doing with it is one of the most sophisticated geopolitical plays of the 21st century. Now, before you think this is just another story about alliances and politics, stop. Because this story is not really about politics. It is about money. It is about who controls the flow of money in the world. It is about who decides what currency oil gets sold in. It is about which country gets to print the money that the rest of the world needs to survive. For 50 years, that country has been the United States. And the system that made that possible has one name, the petrodollar. And right now, in 2025, that system is being quietly challenged. And Saudi Arabia, the very country that helped build that system in 1974, might be the one that helps take it apart. That is the story we are telling today. Not a rumor, not a conspiracy. Verified facts, real numbers, real data, real agreements. Let us start from the very beginning so you understand exactly what is at stake. In 1974, the United States and Saudi Arabia made a deal. It was not a dramatic public treaty. It was a quiet arrangement between Henry Kissinger and the Saudi leadership. The deal was simple but world-changing. Saudi Arabia would price its oil exclusively in US dollars. In return, America would provide Saudi Arabia with military protection, weapons, and a security umbrella that no other country could offer. It sounds simple, but the consequences of that deal rewired the entire global economy. Because once Saudi Arabia, the world's largest oil exporter, agreed to sell oil only in dollars, every country on earth that needed oil suddenly needed dollars first. Japan needed dollars, Germany needed dollars, India needed dollars, China needed dollars, everyone needed dollars. Not because they wanted to hold dollars, but because without dollars, they could not buy the one thing every modern economy runs on, oil. That created a permanent artificial global demand for the US dollar. That demand meant America could borrow cheaply, print money freely, and run massive trade deficits without collapsing its own currency. It was the greatest financial privilege any country has ever held in modern history. And Saudi Arabia was the cornerstone of that privilege. Now fast forward to 2025. Saudi Arabia still sells most of its oil in dollars. The rial is still pegged to the dollar at a fixed rate of 75 rials to $1, a peg that has held since 1986. But underneath that surface stability, something has been shifting. The gravitational center of Saudi trade is moving, and it is moving east. Here's the number that tells the story better than anything else. Saudi Arabia's trade with China has grown at an annualized rate of 50.3% over the last 5 years. That is not a small uptick. That is an economic revolution happening in slow motion. In just 1 month, February 2025, Saudi Arabia exported goods worth 15.2 billion rials to China. That is 4.05 billion US dollars. In a single month, that is 20.6% more than the same month 1 year earlier. And total Chinese investment in construction contracts inside Saudi Arabia between 2005 and mid-2024 reached nearly $71 billion. $71 billion of Chinese presence inside the kingdom. That is not a transactional relationship anymore. That is deep economic integration. And this matters because China is not just a customer. China is a strategy. For Saudi Arabia, China represents the most important single buyer of its crude oil. Saudi Arabia exports approximately 2 million barrels of oil to China every single day. Every single day. 2 million barrels. And China, for its part, has been very clear about what it wants in return. It wants to pay for that oil in yuan, not in dollars, in yuan. In that conversation, that negotiation over currency, is the quiet earthquake that nobody is talking about loudly enough. The Wall Street Journal first reported in 2022 that Saudi Arabia and China had been having active discussions about pricing some Saudi oil sales to China in yuan. Those talks had reportedly been on and off for 6 years before that report. But they had accelerated as the Saudis grew increasingly frustrated with certain aspects of the US relationship. Now, those talks have not yet resulted in a full switch to yuan pricing. The petrodollar is not dead. But what happened next reveals something deeper about where Saudi Arabia is heading. And it has to do with a platform most people have never heard of called Project mBridge. In June 2024, Saudi Arabia's central bank, the Saudi Arabian Monetary Authority, officially joined Project mBridge. This is a platform developed by the Bank for International Settlements, which is essentially the central bank of all central banks. mBridge was built with China, Hong Kong, the UAE, and Thailand. What does it do? It allows cross-border payments using the digital yuan, China's central bank digital currency, completely outside the SWIFT network. SWIFT is the messaging system that connects virtually all international bank transfers in the world. It is the backbone of dollar-dominated global finance. And it is the system the United States used to cut Russia off from the global economy after the invasion of Ukraine. Now here is what makes mBridge specifically dangerous to dollar dominance, and why Saudi Arabia joining it was such a significant move. mBridge does not just allow payments in yuan, it is designed to be currency neutral. It can theoretically handle transactions in any participating country's currency. What it removes is the need for a dollar intermediary. Right now, when a Saudi company sells something to a company in Thailand, that transaction almost certainly passes through a dollar conversion somewhere in the chain. The seller converts to dollars, the buyer converts from dollars. Banks on both sides take a cut. The demand for dollars gets reinforced. Every transaction, every day, across millions of trades globally, all of it feeding the dollar's dominance. mBridge cuts that chain. It allows direct currency exchange between trading partners without the dollar sitting in the middle collecting its toll. And Saudi Arabia, the country whose entire historical relationship with the dollar was built on being the toll collector for America's financial privilege, is now sitting inside the platform that is being built to bypass that toll entirely. That is the significance of that June 2024 decision. Not dramatic, not loud, but enormous. And joining mBridge was Saudi Arabia's quiet answer. It was a message sent in financial language rather than diplomatic language. A message that said, we are building a door out of the current system. We are not walking through that door yet, but we want the option to walk through it. And having that option changes everything about Saudi Arabia's leverage, because leverage is exactly what this story is about. And Saudi Arabia analyst Aziz Al-Gashien said it most clearly. He said, Saudi feels like they have the leverage and they are enjoying the position. That one sentence captures the entire Saudi strategy. Riyadh is not choosing BRICS over America. Riyadh is not abandoning the dollar. Riyadh is building leverage against the dollar by quietly making itself at home in the alternative system. And that alternative system is BRICS. Now let us talk about what BRICS actually is in 2025, because it is very different from what it was even 3 years ago. BRICS started in 2009 as an informal forum of 5 large emerging economies: Brazil, Russia, India, China, and South Africa. It was interesting as a concept, but not particularly powerful in practice. Then in 2023, everything changed. At the Johannesburg Summit in August 2023, BRICS invited 6 new countries to join: Saudi Arabia, the UAE, Egypt, Ethiopia, Iran, and Argentina. Argentina declined after its new president took office and chose to align with the West, but the other 5 accepted. By 2025, BRICS had grown further, adding Indonesia in January 2025. And according to BRICS sources, Saudi Arabia completed its membership in July 2025, though officially the Saudi government has still been characteristically ambiguous about the exact status. What does BRICS look like in 2025? It now accounts for roughly 32% of global GDP in purchasing power parity terms, compared to the G7's 30%. Think about that. The bloc that was built to challenge Western economic dominance has actually surpassed the G7 in share of global economic output. It represents more than half the world's population. And with Saudi Arabia, UAE, and Iran all inside the tent, BRICS now controls an enormous share of global oil supply. The original BRICS members already controlled around 20% of global oil output. Add the Gulf nations and Iran, and that number rises significantly. This is no longer a discussion group for emerging economies. This is a competing architecture for global trade, finance, and power. And Saudi Arabia bringing its oil into that architecture, even partially, even quietly, is a seismic development. Because oil is the language in which global financial power gets spoken. Always has been. And when the world's largest oil exporter starts building relationships inside a bloc that is explicitly working to reduce dependence on the dollar, the implications go far beyond trade statistics. And it is not just Saudi Arabia inside that bloc. Think about what the energy map of BRICS looks like right now. You have Russia, one of the world's largest natural gas exporters. You have Iran, sitting on the world's 2nd largest natural gas reserves and 4th largest oil reserves. You have the UAE, a major oil exporter and one of the most strategically located energy trading hubs on the planet. And now Saudi Arabia, the country that has single-handedly managed global oil supply for decades through OPEC. When you put those 4 energy giants under one roof, inside one economic bloc, building one shared payment system together, the question of who controls the price and currency of global energy starts to have a very different answer than it did 10 years ago. This is not a coincidence of geography. This is the architecture of a new energy order being deliberately constructed. And the fact that it is being constructed quietly, without fanfare, without dramatic headlines, makes it more dangerous to existing power structures, not less. But here's what makes the Saudi position so fascinating and so different from any other country in BRICS. Saudi Arabia is doing something none of the others are doing. It is playing both sides simultaneously, and doing it brilliantly. While it is joining mBridge and deepening ties with China, it is also receiving a U.S. arms package reportedly worth well over $100 billion, a deal that was being lined up for announcement during Donald Trump's visit to the kingdom in 2025. While its oil trade with China grows at 50% annually, its rial remains pegged to the dollar. While its central bank joins a yuan-based payment platform, its sovereign wealth fund, one of the largest in the world, remains deeply invested in dollar-denominated assets and U.S. treasuries. This is not confusion. This is Masterclass level hedging. Saudi Arabia is making sure that regardless of which system wins, the dollar-based order or the BRICS alternative, it wins too. And the United States knows this, which is exactly why Washington keeps offering Riyadh bigger and bigger security and technology packages. The nuclear cooperation agreements being negotiated between Saudi Arabia and the U.S. in 2025 are not just about civilian energy. They're about making Saudi Arabia too deeply integrated with American infrastructure to easily walk away. America is essentially making itself expensive to leave, and Saudi Arabia is letting America make itself expensive to leave, while quietly preparing exit routes anyway. This is the game being played, and it is being played at a level of sophistication that rarely gets the attention it deserves in mainstream media coverage. And then there is the Trump pressure. That is not a gentle warning. That is a financial ultimatum. And what was Saudi Arabia's response? Silence, not defiance, not agreement. Strategic, deliberate silence. Saudi Arabia did not sign the declaration. Saudi Arabia did not reject the ultimatum publicly. It simply continued doing exactly what it was already doing, attending BRICS meetings, holding its yuan swap agreement, maintaining its mBridge membership, and selling arms deals with Washington simultaneously. That silence is itself a statement. It tells Washington, we hear you. We are not committed to what you are worried about, but we are also not committing to stop either. The leverage stays intact. Now let us go deeper into the currency story, because this is where the future gets decided. Saudi Arabia signed a currency swap agreement with China worth $7 billion. This agreement allows direct settlement between the Chinese yuan and the Saudi rial, bypassing the dollar entirely in bilateral transactions. Now, $7 billion sounds large in isolation, but against the backdrop of the total Saudi-China trade volume, it is actually modest. What it represents is not the size of the transaction, but the existence of the mechanism. Saudi Arabia now has the infrastructure to conduct trade with China in yuan. The pipes are built. Whether water flows through those pipes and how much water is a separate question. But the pipes exist now, and that is new. Then there's the gold story. Reports emerging in 2025 from financial analysts describe a potential arrangement being explored where Saudi Arabia would sell oil to China for yuan and then convert excess yuan holdings into physical gold through the Shanghai Gold Exchange International, the SGEI. The mechanism works like this. Saudi Arabia sells oil, receives yuan, converts that yuan into physical gold, and vaults the gold either in China or in newly established vaults on Saudi territory. This creates an oil for gold trading loop that completely sidesteps the dollar. Now here is the important qualifier. Official confirmation of this arrangement has not been issued by Chinese or Saudi authorities, but the fact that the infrastructure for it exists, the currency swap, the SGEI vault framework, the mBridge payment rails, means the capability is there. And in geopolitics, capability very often precedes intention becoming action. Meanwhile, look at what the broader world is doing with gold. In 2023 and 2024, central banks globally purchased a combined 2,082 tons of gold. The previous annual average from 2010 to 2021 was just 473 tons. That is more than 4 times the historical average. Russia, China, India, Turkey, Poland, all systematically reducing dollar holdings and accumulating physical gold. Saudi Arabia is watching this trend. Saudi Arabia is participating in the infrastructure that enables this trend. The direction of travel is unmistakable even if the speed is uncertain. And here is the structural reason why this shift is happening. A reason that goes beyond politics and beyond trade statistics. After Russia invaded Ukraine in 2022, the United States and its allies froze approximately $300 billion of Russian foreign exchange reserves. $300 billion held in Western financial institutions, denominated in Western currencies, simply locked, inaccessible, gone for practical purposes. That single action sent a chill through every finance ministry of every country that holds large dollar reserves, because the message was clear. Your reserves are not really yours. They are yours as long as Washington agrees they are yours. The The moment Washington decides otherwise, they can be frozen, confiscated, weaponized. And Saudi Arabia, which holds hundreds of billions of dollars in foreign reserves and sovereign wealth assets in Western institutions, was not immune to that chill. That moment of 2022 was arguably the single most important accelerant for Saudi Arabia's quiet pivot. Not Trump, not oil prices, not any bilateral dispute. The freezing of Russian assets. That was the moment the alarm bell rang in Riyadh. And BRICS, in this context, is not just a trade bloc. It is an insurance policy. It is Saudi Arabia saying, we will keep most of our money in the dollar system because that system still works and is still dominant. But we will also build and join an alternative system so that if the dollar system is ever used against us, we are not helpless. We have somewhere else to go. We have other rails to run on. We have other buyers, other payment systems, other currency arrangements. That is the BRICS trade route, not a revolution. An insurance policy for a country that has suddenly realized the limits of its most important security relationship. Now here is something that does not get nearly enough attention in this whole conversation, the India factor. Because when people talk about Saudi Arabia and BRICS, they immediately think China. But India is the second piece of this puzzle, and it is just as important. India is now the world's third largest oil importer, and India's oil demand is growing faster than any other major economy on Earth. By 2030, India is expected to surpass China as the largest source of global oil demand growth. And who is India's top oil supplier right now? Saudi Arabia. Saudi Arabia and India have a relationship that is old, deep, and growing fast. India's trade with Saudi Arabia hit over $52 billion in 2023-24. And both India and Saudi Arabia are now inside BRICS together. What does that mean in practice? It means Saudi Arabia can look at a future where it sells oil to both its top two customers, China and India, through BRICS-affiliated payment infrastructure in non-dollar currencies without needing the SWIFT network at all. That is not a distant fantasy. The pieces for that architecture are being built right now. Saudi Arabia sees this. India sees this. China sees this. The only people who seem to be looking away are the ones who should be paying the most attention. Now let us talk about what this means for BRICS Pay, the initiative that most directly represents BRICS as a financial architecture. At the Kazan Summit in October 2024, BRICS members discussed the development of BRICS Pay in depth. BRICS Pay is a decentralized payment messaging system designed to allow transactions between member countries in local currencies, not dollars. It is, in essence, a BRICS version of SWIFT. The goal is to allow a Russian company to pay a Brazilian company or a Saudi oil exporter to receive payment from a Chinese refinery, all in their own currencies, through a system that the United States cannot sanction, cannot monitor, and cannot shut down. The ambition is enormous. The technical and political challenges are equally enormous. But the fact that this system is being actively developed and that Saudi Arabia is at the table for those discussions tells you everything about where the world is heading. And the scale of what BRICS represents now makes that development consequential in a way it simply was not 3 years ago. BRICS controls over a quarter of the world's exports and nearly a fifth of its imports, with the new members adding roughly 16% more weight to those numbers. Saudi Arabia's inclusion is the single biggest individual addition on the export side. When Saudi oil moves through BRICS payment channels instead of dollar channels, the mathematics of dollar demand changes. Not dramatically, not overnight, but directionally. And direction matters more than speed in geopolitics. Let us now address the question that everyone watching this is thinking: is Saudi Arabia actually turning against America? The honest answer, backed by every verified source, is no. Not right now, not in the immediate term. The Saudi rial is still pegged to the dollar. Saudi oil exports still settle overwhelmingly in dollars. Around 80% of global oil trade remains in dollars as of 2025. The US dollar's share of global foreign exchange reserves has declined from 73% in 2000 to 57.7% in the first quarter of 2025. A meaningful decline over 25 years, but still a position of overwhelming dominance. Saudi Arabia is not trying to burn down the dollar system. It is too deeply embedded in that system to do so without burning itself, too. What Saudi Arabia is doing is something more subtle and more powerful. It is diversifying. It is building leverage. It is making itself indispensable to both sides of the growing global economic divide. And in doing so, it is ensuring that whether the next 50 years are defined by dollar dominance or by a multipolar currency world, Saudi Arabia is positioned to profit from either outcome. The Carnegie Endowment for International Peace described this strategy clearly. Saudi Arabia is itself a hedging club member inside a hedging club. BRICS was designed to give middle powers room to maneuver. And Saudi Arabia is using that room with more skill than almost anyone else in the bloc. But there's a third dimension to this story that goes beyond oil and currency, and that dimension is Vision 2030. Because Saudi Arabia's deepening BRICS relationships are not just about protecting oil revenues. They are about funding the transformation of an economy that knows oil will not last forever. Crown Prince Mohammed bin Salman has staked his legacy on turning Saudi Arabia into a diversified, technology-driven economy by 2030. That requires enormous foreign investment. That requires technology transfer. That requires partnerships with countries that can provide manufacturing capacity, construction expertise, and long-term capital. In China, BRICS' economic engine can provide all three at a scale the United States is not positioned to match. The Chinese investment figure bears repeating. $71 billion of Chinese investment and construction contracts inside Saudi Arabia between 2005 and mid-2024. Chinese companies are building infrastructure, industrial zones, and technology parks inside the kingdom. That is not happening because of ideology. It is happening because it serves Saudi Arabia's Vision 2030 agenda directly. And as Saudi Arabia builds a post-oil economy, the trade routes that will matter most are not the routes to Texas oil companies, but the routes to Chinese manufacturing complexes, Indian technology firms, Russian grain exporters, and Brazilian agricultural powerhouses. Those are BRICS economies. Every major sector of Saudi Arabia's diversification agenda has a natural BRICS partner. That is not a coincidence. That is convergence. And this convergence has been building for years. The Asia Society Policy Institute published a significant report in January 2025 exploring how Saudi Arabia's Vision 2030 transformation might play a pivotal role in reshaping global currency dynamics. The report specifically examined how China's digital yuan and the mBridge platform were actively creating new architecture for petrodollar alternatives. The report noted that intertwining forces, technological, geopolitical, and economic, could accelerate changes to the dollar-based financial system in ways that go beyond geopolitical shifts alone. And at the center of those intertwining forces sits Saudi Arabia, not as a passive participant, as an active architect of its own options. Now let us think about what all of this means for ordinary people watching this video, because this might feel like a story that only matters to finance ministers and central bankers. But it is not. Here is why it matters to you directly. The dollar's dominance as the global reserve currency is what allows the United States to borrow at low interest rates, run enormous deficits, and maintain a standard of living that its raw economic productivity alone might not fully support. If the dollar's share of global oil trade declines significantly, the artificial demand for dollars declines with it. That means higher U.S. borrowing costs. That means imported goods becoming more expensive for American consumers. That means the U.S. having less financial flexibility to respond to its own economic challenges. And for the rest of the world, for countries in Asia, Africa, and Latin America that have long been forced to hold dollars and absorb American inflation, a multipolar currency world means more options, more autonomy, and potentially lower costs for conducting trade. The stakes of what Saudi Arabia is quietly building are not abstract. They land in every household that buys imported goods, pays interest on a loan, or holds savings in any currency anywhere in the world. Now let us zoom out one more time and see the full picture from the highest altitude, because what Saudi Arabia is doing in 2025 is not unique in isolation. It is the most dramatic example of a trend that is reshaping global trade from every direction simultaneously. Countries that were once firmly in the Western economic orbit are diversifying their relationships. Countries that held dollars because they had no choice are now building yuan relationships, gold reserves, and alternative payment infrastructure, because they have decided that having choices is worth the cost of maintaining them. Central banks globally are buying gold at 4 times the historical average. BRICS is building its own payment system. Saudi Arabia is joining mBridge. India is conducting oil trade in rupees with Russia. Brazil is exploring renminbi swap lines. The individual moves look modest. The collective direction looks transformational. And the United States is responding. Trump's tariff threats against BRICS countries, a warning of a 100% tariff on any nation that tried to replace the dollar in trade, are themselves a recognition that the threat is real. You do not threaten countries with economic punishment for something that is not happening. The very fact that Washington is issuing those warnings tells you that Washington sees the same trend we are describing. Saudi Arabia's response to those threats has been characteristic. Silence. Strategic ambiguity. Stay out of the headline. Keep both relationships alive. Keep both doors open. Let the world fight its battles while Riyadh quietly deepens its optionality. And here is perhaps the most important insight of this entire story. Saudi Arabia does not need to choose BRICS over America to achieve its strategic objectives. The choice itself is the power. The fact that Saudi Arabia can plausibly move toward BRICS, that it has the relationships, the infrastructure, the currency arrangements, the institutional memberships to actually execute that move, gives it leverage over Washington that it did not have before. Every time Saudi Arabia joins another BRICS affiliated platform, every time it signs another yuan swap agreement, every time its oil trade with China grows by 20% in a year, that leverage grows. Washington knows it. Riyadh knows Washington knows it. And that mutual knowledge is what produces the arms deals, the nuclear cooperation agreements, the technology partnerships, and the security guarantees that Washington keeps offering Riyadh. The BRICS route is not an alternative to the American relationship. It is the instrument that makes the American relationship profitable for Saudi Arabia on Saudi Arabia's terms. That is the secret move. Not abandonment, not betrayal, leverage. Sophisticated, patient, long-term leverage built through decades of relationship building on multiple fronts simultaneously. Saudi Arabia spent 50 years as the anchor of American financial dominance. Now it is spending the next 50 building the optionality to be something else if it needs to be. And the entire global financial architecture is going to feel the effects of that repositioning for decades to come. There's one more thing worth understanding before we close. And this is the piece that makes everything else make sense on a human level, not just a geopolitical level. The people running Saudi Arabia's financial and foreign policy in 2025 watched what happened to Russian oligarchs in 2022. They watched $300 billion of state reserves get frozen. They watched the swift disconnection happen in real time. They watched how fast a financial weapon can be deployed when the political will exists. And they made a decision, a quiet decision, a strategic decision, a decision that says, we are going to make sure that decision can never be made about us, not by building enemies, not by making enemies, but by building relationships on so many sides that no single relationship can be used as a weapon against us. That is the BRICS trade route. That is what Saudi Arabia is choosing, not loudly, not publicly, not with press conferences and speeches, but in balance sheets and swap agreements and platform memberships and investment contracts worth tens of billions of dollars signed quietly in boardrooms on 3 different continents. The most important decisions in the world are always the quiet ones. And this one, this slow, careful, deliberate repositioning of the kingdom that once handed America its greatest financial privilege, is reshaping everything. The world you are living in right now is not the world that will exist in 20 years. The rules of global trade, the currencies of global exchange, the architecture of global finance, all of it is in motion. Saudi Arabia is not just watching that motion, it is steering it, one quiet deal at a time. And perhaps that is the final lesson this story teaches. In the old world, power was announced. Countries signed treaties in public, alliances were declared with ceremonies and flags. In the new world, power is built in silence. It is built in swap agreements and platform memberships and infrastructure contracts and central bank decisions that never make the front page. It is built by a kingdom that smiles at Washington while connecting its financial plumbing to Beijing. It is built by a country that signs a $100 billion arms deal with one hand and a $7 billion yuan currency swap with the other. Saudi Arabia is not confused. Saudi Arabia is not being pulled in 2 directions. Saudi Arabia knows exactly what it's doing. It is building a world where it is too important to every major power to be pressured by any of them. It is making itself the essential country, the country that no bloc can afford to lose, the country that no alliance can afford to alienate, the country that sits at the intersection of every major energy, trade, and financial route on Earth. And right now, in 2025, that strategy is working. Watch this space, because the next chapter of global financial history is not going to be written in Washington or Brussels. It is going to be written in Riyadh, quietly, deliberately, and entirely on Saudi Arabia's terms.